All right, my name is Justin Dion, and I work for Bath Savings. And I'd like to preface this. I apologize in advance. I'm not the sharpest tool in the shed today. I'm a little under the weather, so if I stutter, don't hold it against me. But I am a commercial lender for Bath Savings. I've gone on my 16th year now, and I had 10 years of experience on the residential side of lending, and then switched over to what I would call the wild, wild west in commercial lending. Been doing that for 6 years, and started right at the beginning of COVID on January 1, 2020, which was a heck of a time to get involved. But in terms of what I do and how I can help in a traditional sense, it's lending, right? When a business needs funds, typically the one that you call. In more of a non-traditional sense, kind of like an advisor to a lot of my customers as well. And you had mentioned the work relationship earlier, Alex, and that really does kind of summarize, how it works with a local institution. It really is a relationship. Right before I pulled in, I got a call from one of my customers who there was a deposit off yesterday, and so I'm often the first point of contact and kind of help steer people in the right direction there. So that's what I do in a nutshell.
Great. Thank you.
I'm Nikki Kimball, and I'm a commercial loan officer also at Post National Bank. And so been in banking now for almost 30 years. I started as a high school intern and have worked in every department, both front and back shop. So I'm pretty well rounded in all areas of the bank, but I do focus on the commercial lending. And so our bank basically spans from Wiscasset to Calais, and we are a traditional bank, so we offer lending, investments, deposits, all of the things. And what I can really do for a business is be not only the lender, but a partner. So as the business at all stages, they can come to me, lean on me, use me as a resource, try to make things easy. Being in banking this long, I've probably run into a lot of different scenarios that these businesses are facing, and can be a person that helps steer you through those changes. So
My name is Morgan Laidlaw, work with Bangor Savings Bank. Bangor Savings Bank is also a traditional bank. It's been around for 175 years, and we're into Maine, New Hampshire, and starting to brush a little bit into Massachusetts. On the commercial team, I specialize in small business, work with a lot of startups, a lot of mom and pop operations. Our goal is sort of to see Main Street thrive. So that's kind of what we do. And we help, similar to what Nikki said, we want to be a main part of the team. And so, your banker is very important. A lot of times it's the first contact, and we help business owners build their team. And when you have a good team, it all starts there.
mm-hmm.
So thank you.
Great. Well, thanks for those introductions. That will lead us into some of the questions that we've talked a little bit about. So I'll let you guys sort of figure out who wants to start, but in an increasingly digital world, what is valuable about working with local banks in general? And so some of the things that we think about in the county, especially with safety, is fraud and scams. That comes to mind as one of the benefits of working with a local bank. Talked a little bit about relationships, but if you want to build on that and add some other reasons why in a digital world, why working with your local bank is attractive, considering all the online possibilities that are out there for handling your money.
I can take that one if you don't mind. So I think speed is important. So having a contact at the bank, somebody who knows you and basically knows your business and can detect trends if something looks off. Somebody who you know personally at the bank is probably going to call you right away and just help work you through whatever the issue might be. And there's technology in place and to detect, some type of fraud and things like that. But I think having a person and having that knowledge of your customer makes a huge difference in that scenario.
Yeah, I think, when it comes to relationships, I often find that people don't necessarily value them as much when everything is going right. It's when things go wrong, when there's something that happens outside of your control, that, that's when you really are leaned on, right? The whole COVID era and PPP loans, I've oftentimes, I've just had great customers who are just on vacation and who just forgot a payment. Well, I'm gonna waive a late fee for them, right? That's not who they are. That's not what they do. And so there are a lot of different ways that we can kind of help. You're able to work with your customers a lot more. You have a little bit more flexibility. I don't think you're going to get that same sympathy from some underwriting department in Nebraska, for example, right? So really, when things go wrong, I think is when the most value kind of comes out.
You need an advocate, and your local banker, if it's a good relationship, is your advocate and can help you in all phases of your operations. And in some instances, I've been known to move furniture for business owners before. You can do a little bit of everything and kind of roll up our sleeves. And like you said, at 1-800, lend, whatever the phone number is, you're not going to get that.
Mm-hmm. Yeah. Your bankers kind of live and shop and do business in the community. So, I think that partnership is very valuable that way.
Absolutely. And it's not necessarily, I focused on when things go wrong, but even, if you have if you're a brand new business and you're new to commercial lending, the last thing that I would want in those shoes would be to be sent a bunch of paperwork and say, here, fill this out, and somebody will get back to you at some point. That's not helpful. That's daunting, I would think, as a business owner. So, just through the application process as well, to be able to kind of sit down and really, walk customers through the steps and lay out a plan is pretty valuable, I think. So.
Actually cues us right up for the next question, which is really, yeah.
Could I add one?
Oh, sure, Jen, absolutely.
I can give multiple examples of our businesses in Waldeboro benefiting because working with the local bank, the commercial lender had their eyes on commercial properties and other kinds of things going on, and they guided them towards opportunities at the right moment several times. And that made all the difference in them being able to grow and stay steady and strong.
Great, thanks, Jen. Great example. I guess I'll open it up to the room if anybody else has any other examples they want to share.
The collaboration is huge, whether it be a real estate agent, a CPA, an attorney, being that convener to introduce people for the resources that they need.
For other services.
Yeah.
And with a lot of the times, peer assistance from other peers in the industry. And of course, we want to talk to those mentors first and make sure they're open to receiving a phone call from a business owner, but the collaboration and the connections are really important.
So Alex, I'd like to add something if I may.
Absolutely, Ed.
I'm Ed Ross and I'm a volunteer with SCORE, which is an additional resource. It's a national volunteer organization. And when I work with my clients, I'm a former business owner. And I say, look, I strongly advocate dealing local. In the case of a bank, let's just say you've been in business 3 years. You've either got a problem or an opportunity. I want to be able to pick up the phone and call somebody that knows me. I don't want to have to deal through, I want to be local. Whether it's a bank, whether it's a bookkeeper or accountant, whether it's an insurance broker, whether it's an attorney. I want somebody I can have a relationship with.
Great. Thanks, Ed. I appreciate you adding that up. And anyone else?
I think having a local person too, if you're having a difficult time, they can modify the terms of your loan. If it's just a temporary situation, which is probably easier with a small community type bank than a larger bank who you're maybe seeing more as a number versus a person and a business in our community.
Yeah. Yeah, it goes back to that. Not that you can take any risk you want, but you can take a little more risk because you're familiar with the business that you're working with and you know them. Great. Yeah.
I would just add that sometimes I see folks that are perhaps intimidated by having a conversation with their commercial lender. So that is the SBDC and SCORE certainly are great resources for as a first stop, to help educate business owners about the process, what's expected, those types of things. Certainly, SBDC and SCORE build relationships with local banks so that we can make appropriate referrals and make those matches. So that can be a good resource for that purpose.
One of my favorite things that I like to do is to go out and see the operation itself and really understand the cash flow cycle, in the problems that the business owner, encounters, and by seeing that firsthand, super beneficial. And again, that's a local bank thing. A national bank isn't going to have that. Yeah.
And one of the other things in that same vein is that we're a seasonal economy, and banks outside of Maine, probably most of them have no idea what are the challenges of a seasonal economy and how the operations have to be different. So that's another good reason to use our local people.
It does cue us up for the next question, really, which is, if you're a bank or if you're a business that wants to approach a bank, what are some of the what's some of the documentation and the information that the bank needs to start thinking about, or you need to bring to a bank to start thinking about forming a relationship? So like, what particular financial documents do you need to have? Sort of what state do they need to be in once you are ready to go talk to a bank, that kind of a thing. I think there's probably, I would imagine, some businesses that are really early startup that don't particularly have their finances in order, right? And so what's some advice, or what are some of the documents they need to have in order, and in sort of like what state do they need to be in order to come talk to you? And I bet you're going to say they can be in any state at all.
Need to be perfect.
Yeah.
No, but the more current either a plan is or the financials are, the better. And even if it's on a napkin, I want a current napkin. But just something that shows the effort has been put forth, and that you're coming in to make a request, but I haven't filed my taxes in 2 years. That's sort of something we run into, and it's a little bit of a warning sign. So just keeping things current, and understanding what the benefit will be, i.e. a plan, super helpful. Yeah.
Yeah, it's, so typically, what do you need? The last 3 years of tax returns is a pretty common request, right? Beyond that, it really depends on what it is that you're trying to do. And, are you an existing business? Is this a brand new business? For a startup, a business plan is something that we absolutely need. Projections of how you think this is going to go is also very important. And those are when we would certainly rely on Jen and SCORE to kind of help put those things together, because that can be kind of a daunting process, but it is very important. If you're purchasing real estate, rent rolls, or any historic information, if you're buying an existing business from somebody else, any historical financials that we could get would be helpful as well. So it kind of depends on what it is you're trying to accomplish. It really depends on what it is that we'd be looking for.
And in addition to the tax returns, the business plans, and those types of things, current financials, having a personal financial statement, I think sometimes is helpful, because the banks oftentimes will expect some sort of collateral. So if you don't have the cash for like a down payment, sometimes you have another asset that you could use as lendable equity to help you kind of get to that next step. So I think it's important to fill out as much information as you can, or at least express what options might be available based on what you have for assets.
I'll just add, y'all can correct me, but when I work with clients, I talk about the business plan. If it's a business that's already in business, so we're looking at P&Ls and balance sheets for the previous years. If it's a new business, then we're looking at at least a 3-year cash flow projection. So that's how I'm coaching people to get prepared for that process. And we have templates, so we make it easy for them, and we help them translate and understand that data and get prepared for those conversations. So definitely reach out to us for those resources.
Yeah, and actually that, that was one of the questions I wanted, if you had anything you could dig in deeper into sort of like how a business might get prepared with you, what that might look like, even just to start the first conversation.
Yeah, I mean, so primarily how we work with folks is one-on-one. So we offer one-on-one free confidential advising services. So basically people just make an appointment with me. And if they are talking about growth and looking at a commercial loan, then we just kind of typically we're digging into the financials, because oftentimes that's the pain point for them. But business plan is critical. And again, we give them templates. They go back to work and get that information together. And then I give feedback on that, make sure that it's sound, that there's no gaps in that process. But yeah, so it's an iterative process. So we're doing that over the course of however long that takes the individual business to work towards. And then we're modeling, oftentimes we're modeling what I'm working with someone now who's preparing for this process, and he mostly just wants an equipment loan, but he wants to hire people. So we're potentially going to model what would some perhaps additional working capital look like, what would the loan terms look like, so we can model those types of things. It really depends on your individual circumstances, and we're comfortable, any SBDC advisor can do this. So regardless of where you are, but we can easily do that with you for sure.
The other thing is that, whether it's a business acquisition, if I can tell a prospective business owner that these services are free, and you're going to get either somebody who's from SBDC or the Society of Retired Executives who can sort of say, you're crazy to be doing this. Where banks have lender liability laws, and we sort of have to do what the borrower or customer tells us to do. But SCORE can really give a true opinion of how this is expected to cash flow, and SBDC. So super important to take those steps.
And oftentimes it's a reality check for people. Like they think that they need X amount, but the cash doesn't flow. So then it's a conversation about, going back and getting more ready, or getting to a place where the ask is more realistic, or, whatever the language is. But a lot of those conversations as well.
I think updating a business plan is not just for a startup. I think it's a good exercise for businesses to probably do it annually, because things change over time. Just because you've done something a certain way for many years doesn't mean it's the best path forward. And things can be done in phases. And if you're revisiting that frequently enough, you can make those kind of a reality. And I do think that people or businesses should apply for a line of credit even when they don't need the cash flow, because the last thing you want to do is come into a bank and apply for a line of credit and everything looks horrible. Do it when things look good, and keep it there as an umbrella, even at a zero balance. If that's helpful, that way it's there for the rainy day. If something comes up, you're not coming when you're desperate.
And I'll just add from the lender perspective, there's a lot more confidence given from a startup that has been through the process of meeting with Jen or with Ed and going through and really understanding the projections, the assumptions behind those projections. Where are we getting these numbers from? There's kind of another layer of confidence there. So definitely highly recommend utilizing those services for startups in particular.
It's really beneficial when the business does launch, and in the instance where it doesn't really go according to the plan. Well, let's go back and look at the plan and look at the assumptions and figure out the changes that need to be made. And a lot of times new business owners are a little hesitant or don't want to put the work into a plan. And unfortunately it shows that happens.
For me, the real value of a plan is the thought process that you have to go through in order to develop it. Because once it's done, it's just a plan. and real life is gonna be different than the plan. But it helps form your thinking process. When I listen to Jen, I think she's echoing all of my thoughts or experiences. I've recently run into a number of people that come with a business proposal, and they say, well, we're gonna have this amount of sales and we're gonna have this amount of profit. And I say, well, how are you gonna do that? Oh, and they don't have any details behind the numbers or the thought. And it's really disheartening.
Have you had success sort of walking them through that? And
Mixed.
yeah, that's a tough conversation to have.
Yeah, I mean, if the people are interested, if the people have the ability and are willing to take the time, then you can start off small and build a good plan with them. But some of them lose interest along the way, which is also part of the process.
It all takes perseverance. It's kind of what Ed's saying, and I think Ed probably doesn't remember this, and I've shared this quote before, but either using SVDC or SCORE. I remember him saying to a lady that I'll quit on you, or you'll quit on me before I quit on you, is what he said to her. And it really, they put in the work, and the business took off. I remember.
Yeah, I remember. She was one of my early SCORE clients, and she ran a good business for 10 years, providing a real service to the community. And then COVID came along and really upended her. But she was a fun experience.
Yeah.
So, I guess building on the sort of lending relationship, local banks do offer a lot of services. We've talked a little bit about keeping an eye out on accounts, and if you see something that gets flagged, you can reach out to the business owner. What are some of the other things that like local banks can offer a business in terms of whether it's cash flow management or you talked a little bit about networking. So just sort of like the longer term relationship with a local bank, the benefits of that.
Yeah, we sort of mentioned that earlier, and you just mentioned it again, but it takes a village, right? And you really do need a team around you. And oftentimes, I think, the business owner will start with the bank because they need the money. That's the immediate need. But then there's all of these other ancillary, services and things that they need, and the team. And so being able to make those referrals, those connections, is super, super important. And, and even especially for newer business owners, bookkeeping services is kind of like the top of the list right now from all of my customers. Everyone's looking for a good bookkeeper. It's not uncommon for a business owner to be fantastic at the thing that they do. And who really likes paperwork? Nobody likes that process. And so to make sure, if that's not one of your strong points, to make sure that you do have that kind of in the background. One thing that I run into often with some of my smaller business owners is, they'll come to me halfway through the year, of the way through the year, and they say, hey, they need this loan for this piece of equipment. I said, well, that's cool. Can we get a profit loss statement, something current, right? As Morgan mentioned, even if it's a napkin, it's going to be something current. And oftentimes they're not able to go and print it, right? They have to basically start. A lot of business owners unfortunately wait until year end to reconcile their entire year, and it makes it very difficult to help businesses that way. So again, being able, if QuickBooks isn't your strong point and you can't afford to hire somebody for that position, the bookkeeper, those are very, very important pieces. So if we're able to make those connections for people, then it's super helpful, I think.
To add to that, I think the worst thing that a business owner can do is not know how to perform every task related to the business. And we see it every day. business owners that put too much reliance on the bookkeeper or the finance person. And all of a sudden the restaurant goes from one location to 3 locations and that business owner is spread super thin. And all of this responsibility gets put on the financial person or bookkeeper. So what I would say is make sure that the business owner should know what each of those roles are. And just keep an eye on things and make sure that the controls are in place because embezzlements happen every single day. It's terrible. It can really trash a business, frankly.
Mhm.
Sad to say.
So we've talked a lot about local banks. That's what this workshop's all about. But sometimes there's a position that a business is in where you need to approach alternative funders. In my mind, a lot of that is SBA and CEI. So I wanted you all to talk a little bit about when is the point that a business would approach whether it's a community development financial institution like CEI or SBA for funding, and whether they're the alternative or a complement to a need.
A lot of the time, a bank will lend on the collateral. And in some instances, there's a goodwill portion of a business there. So a lot of the time, some of our partners like SBDC, CEI, et cetera, will help finance the goodwill portion of the loan, and the bank will finance, the collateral portion of the loan. So that's an instance. The SBDC person or CEI person a lot of times has helped with producing the business plan anyway. And so they're super familiar with the borrower situation, and it's a nice cohesion.
Another time that it's helpful too with SBA is like the 504 program. If somebody's looking to finance real estate and maybe doesn't have the full down payment requirement, or if it's based on projections, the bank might want to share the risk. And whereas the bank will finance 50% and then the SBA will finance 30, 40%, whatever it might be. So that's always a good time. But I also work with Finance Authority of Maine as well as the other organizations, which I think is helpful too. It's not a guarantee, it's more of a insurance. So they basically insure and help minimize risk for a bank by having insurance on a portion of the exposure, which sometimes is helpful when things are a little bit marginal or a startup.
Yeah, it's a great point, right? If you're sort of teetering on, if the bank is kind of teetering on the line of, is this something that we can get comfortable with or not? Often those resources, the SBA, FAME, can be utilized, just kind of put you over the finish line. And on the other coin, I've had examples in the past where I haven't been able to finance the startup for whatever reason, and I think it's important as lenders, you don't just say, no, we can't help you, right? It's no, but let's try this or do this. This is what we need to see, in the future. And I've had a couple of really nice, successful instances where wasn't able to help, referred them to CEI. And by the way, that's not just call CEI, that's an introduction that you're making, that's sharing the financials that's already been provided, assuming the borrower's okay with that. And CEI has been able to do that. They have a little bit more appetite for risk and they got comfortable with it. So couple of successful businesses there. So even when it's a no, it's not necessarily a no and get out, right? It's it's a no, right? It's not right now. Or try this other method. So
now I find that business owners are some of the most inspiring and optimistic people that I've ever met. But with that, my advice is these are all traditional paths that we're talking about that require the business owner to do their homework. I would strongly urge you to really put a lot of consideration into predatory lenders. We're seeing that in a lot of situations where a hardware store might need $100,000 pretty quickly, and we're not able to do that. So they call 1-800 whatever, and it's absolutely terrible. A lot of the time they can get the money the next day, and it all sounds good. But these payments turn into weekly payments, and in some instances, they're scooping a significant portion of the merchant sales every single day. The interest rates can approach triple digits, and it's really, other than saying gross, it's really scary. And once a business goes down that path, it's very difficult to get out. And a lot of the time, if you're thinking that you need to go down that path, you need to take a step back and really look at the fundamentals of your business. And that's a good time to meet with, or hopefully you've already been meeting with SCORE in SBDC, but there's usually some fundamentals that might be a little off. I see it a lot in capital intensive businesses. It's sad.
The other thing that I caution is that some of these predatory lenders, they're scouring the registry of deeds. They'll basically, the credit bureaus sell your information to some of these lenders. So like if I pull a credit report and you don't opt out, the business owner is going to get all these phone calls from all these different avenues that might not be a good traditional bank. It might be somebody who's offering something that seems probably too good to be true and is. So I kind of educate my clients now, like when they make application, I'm going to be pulling a credit report. The bank doesn't sell your information, but the credit bureau does. Do you want to opt out? Because you're probably going to get a lot of phone calls the second I pull your credit.
Yeah.
And so,
Yeah, that's a good point.
That's huge.
yeah.
And they're so persistent. They're texting, they're calling,
Yeah.
boom, boom, but just relentless.
Yeah.
Yeah, and they offer these teaser rates, but you don't know what the conditions are, right? It could be
Just sign
significant
here. Yeah.
payment
$500,000.
penalties. You
Yeah,
just don't
there you go.
know.
Yeah.
That's the thing.
You'll get it tomorrow.
So there is benefit to going with a local bank.
Yeah, it really, that summarizes the relationship aspect, right? It's just, don't be afraid to pick up the phone and call who you know, who you trust, before you make a decision like that, because, Morgan's absolutely correct. It's a really, really slippery slope when you start going down I call them payday loans. So before you make any decisions like that, or if something just doesn't seem quite right, and this could be, anything, any solicitation, there's so much solicitation, so much fraud, just pick up the phone and ask. It's worth the 30-second phone call, to get a little bit more guidance. And, don't be afraid to reach out, I guess is my message.
When determining the relationship with your bank, sort of vet the banker and see what their willingness is, and willingness and ability to have challenging and sometimes unpleasant conversations, because that's part of the business relationship. And if it's a bank that's going to block you and just doesn't want to hear anything negative, that should be a sign that, geez, what happens if something really goes wrong with my business? Is this going to be a person that I can lean on? And some, we all keep tissues in our office. Sometimes it's hard out there. Being a business owner is one of the most challenging things you can do, and rewarding. But there's a lot of pains along the way. You need to have someone that can sort of take the
To be ready for the tissues.
right. You set me up all this time. I appreciate it.
Yeah.
I had a couple, a relatively young couple who wanted to buy an existing established pizzeria and worked with them diligently. And they were successful. They got some local financing, and after they got that done, they didn't want to talk to me. They were all, and I found out after the fact that things had gotten tight, and they had an easy borrowing source. And they said the interest rate was low, but what it was a company taking a significant percentage of their proceeds. Which, oh yeah, I mean, And there was another SCORE mentor who was a retired attorney and said, this is illegal, but I mean, what are they gonna do about it? They're in no position to do anything. So I just echo everything. It just, I'm sure you've seen them.
I've seen small Main Street food establishments, basically these, cash flow lenders, they're scooping, $400 or $500 a day before, anything even happens.
Yeah, they do factoring,
Yeah,
like off of invoices or accounts receivable and things like that, and it's hard to get out of that cycle.
You'll never do.
Mhm. Yeah, it's tricky. It's like last resort.
But
Jen?
Oh, yeah, I have a story related to that as well, but, I just want to offer that the SBDC doesn't do any loans. So we're strictly an advising organization, so just to clarify on that. But yeah, I had a client that started, their business, last June, July-ish, after getting rejected from a few lenders. They got an online loan to purchase a large piece of equipment, started the business. The business was highly successful, but then she came back to me in December and was like, we're paying 24% interest. And actually she worked with Bangor Savings to refinance the loan and is now buying the second piece of equipment in the next deal. So definitely, sometimes it's the only resort, but definitely keep the drumbeat going and working with a local bank that's gonna, definitely be a better fit for you, hopefully. So.
So I think that sort of gets through the questions I had prepared. At that, I think we're gonna open it up for a Q&A, and I'm gonna stop the recording.